Uranium friends, you look as I look. Big boards. Let's get after it. So CCJ, first things first, right? So this is a daily downtrend confirmed with no follow through. This is basically what any basic technical analyst will call it: low, high, higher low, lower low. No follow through, right? So it's bounced from there. Okay, so but the thing is that we need to talk about here is it's a downtrend. It actually officially has confirmed a downtrend with no follow through. Again, what does that mean? So here's your, let's just say here's your high, which that's what it is, right? Now it makes its first low. Okay, great. Comes back up with the bounce on the daily bounce, fails to make a new high off of that, right? So now it comes down and makes a new low compared to that low, right? So that is becoming saying, okay, it just established a daily downtrend, but no follow through because now it's bounced already. So key level is becoming this 78 area, obviously the 80 area as well. So, some upgrades came in last week too. And so I forget who it was, but someone was calling, some shop was calling for like 115 bucks. Take it as you will. All right. CCJ, no matter who, what says anything about their contracts or any of that stuff, it's the most highly liquid name in the entire space. I would contend that and URA. Everything else is nowhere near that at the moment. The builders like the Oracle and SMR and whatnot, well, they've got some pretty good liquidity as well. But nothing beats this option chain. Nothing beats the length of establishment that the life of this company is. So CCJ is always going to be on my particular radar. It's one of my favorites to play options, to play straight shares, to long, to short, whatever. Okay, but it's established the new low here for CCJ is this. Let's get that little magnet on there. Okay, so 68.96. That's our number to hold. All right, and our number to take out is up here. Let's just say it's 73.60. Oh, that's interesting. 78 $79, right? So 78.70, 78.87, 78.96. So let's just say it's $79. We got to get over that. And then we'll be testing this here. So here's your fib run from this big move off of April, the most hated rally in all of stockland, right? And again, daily 12 EMA rider. If you guys think I'm nuts, there's people who think I'm nuts, or it's what the hell is this guy talking about with these riders? Over and over across the space, you could see it over and over. Look, daily 12 EMA rider on the way down. Of course, some undercuts. You're probably going to get some undercuts here. This is technically the first undercut that it's had, really. Well, it had one here. This is technically one of the first big undercuts it's had, um, since July. So we have to see where it goes, but it did confirm a daily downtrend, and it's got no follow through at the moment. It's a heck of a bounce. Left a gap behind. Nothing says that it's not going to fill that gap right quick. It could, it should. I hope it does. Blah, blah, blah. All right. So, again, when I'm in these spots, I'm looking for what does it look like on a shorter term time frame, right? So, it's created enough space here, but this is volatility, right? So, here's a beautiful grind. Now, this is just steady buying, right? Very little selling. So, then you just get the rug pull here happening. And this is just some volatility. So, is it reasonable to assume that this little gap gets filled? Yeah, it absolutely is. And that would probably make me a buyer because I would say that the most likely scenario here, hopefully, is that this gap gets filled, but it holds this low, right? So, I come on down to here, top out somewhere where it should, if things go the way most things go, it should top out in this area. Come back down, fill the gap, hold that low, Then you're talking about follow through on the daily trend change. All right, so that's what I'm looking for with CCJ. The weekly is going to be fine. There's very little consolidation. We all know this. If you look at these Fibonacci retracements, it hasn't even tested the 23% retracement, let alone the 38% retracement. So, in terms of charting and Fibonacci retracements, this it coming all the way down to $58. It is a very healthy piece of consolidation, and that will catch these rising moving averages, the rising anchored VWAPs from whenever I pulled them, which was a long time ago. Um, so it's a great this to me in this area was probably would end up being a great buy, but we're not there yet, right? So we don't have to think about that. All we have to think about, does this level hold? That's the level I'm watching. It's pretty clear. This thing is in a range. You're 68, $69 to $80. That's the range. We have to see where it breaks and how it breaks. Weekly hammer last week, but you know the market in general has done that. So we have a very stretched situation with these moving averages. You have a pretty clear RSI divergence. Couple of checks in the Bears' favor on that, but it's looking good, CCJ, until it's not, right? And when is it not looking good? Well, when it follows through on this confirmed daily uh, trend change to the Bears. So 68.96 just becomes a key level. It doesn't matter what people say about valuations or any of those things. Gap City down here, so it's going to be really hard to be dip buyers. Dip buying is going to be tough because there's so many gaps, and you're going to be scared. Not scared, but hesitant to buy these dips because it gets down into this area, into this gap. You say, okay, it filled that gap into this consolidation in a 23% retracement. Yeah, that's pretty good. But it's got another gap below, right? And more consolidation right at the 38% retracement. So, you know, trading plans could be all right. Well, I'm going to take a quarter of a position here. I'm empty on CCJ, right? That's my. Let's just say I've sold out all my CCJ on this daily downtrend, for example, right? Hypothetical. By the way, full disclosure, I have zero exposure to CCJ right now. So, I mean, yeah, I'm looking for, I need to, I'm developing a trading plan as I look at this chart, by the way. So maybe I take a quarter here. Maybe I take a quarter here. Maybe I take a half here. And then maybe I decide, okay, well, if this breaks down, this 50% retracement, I got to assume it's coming down into here to test these anchored VWAPs. So do I want to suffer through that type of drawdown with CCJ, knowing that I can just kind of wait for the right side of the V? You've heard me say that many times. So I don't have the answer right now. Honestly, I really don't. I'm just looking at what we have now. A daily downtrend confirmed with no follow through. So the action in the next couple of days, week or two, is going to be very telling. That's that. So DNN, Dennison came and got me that little pig on my traders, right? Picked me off by 2 cents. But I said I was going to have a hard stop at $1.88, and I did, right? And that's that. So it took me out and ran away with it. Fine. Don't care. Still have a core, right? So that's what trading around the core is, right? So I bought I'm going to have to do something separate on DNN, but you know, I bought at whatever I bought at. My cost basis was literally right around here in this $1.90, $1.89 area. So I didn't want to lose money, right? Rule number one for investing is don't lose money. Rule number two is don't forget rule number one. So I'm sticking with that. I'm an older guy. I'm more conservative. I'm playing a highly volatile sector. Denison's not my favorite name, regardless of that. But same deal with everything. We're going to see a lot of similarities, right? They're all going to have these little dinky daily trend changes to the bears without follow through. So, again, the key level for now is going to be 211. A lot of action there. And then the key level is really this 239, which is going to get you to 242, and it's going to start getting through here. But, you know, the Bears have been defending this level fairly well. One would expect that they're going to again. depending on the space, depending on the price action. I always look to the leader on this, CCJ, to see how that reacts. But Denison is okay, right? Shorter term time frames have cooled off on the RSI, making the weeklies more acceptable, right? So we have your high, your low, your higher high, right, and a lower low. So it's trying to it's just simple consolidation. It's trying to establish what it wants to do. These are all questionable spots, right? You're in the middle of a range. I don't touch things in the middle of the range, right? There's no point in because it's a totally binary situation right now. No matter what anybody says about ISR and all that stuff, it's binary, and I don't touch things in the middle of the range. I'd rather be taking a low risk short up here, believe it or not, or a low risk wrong long down here, even though I got stopped out. I have no problem taking another trade. I don't care if I buy higher. We'll see how it plays, but it's in the middle of the range, and that's what Denison is doing right now. So Denison for me is a no touch. Again, I have a core. It's small because I've been trimming on this run. So my traders were supposed to kind of maybe add to the core if it broke through this stuff here. It didn't. It rejected me. It got me. It's just the way it goes when you trade sometimes. So this daily low here, this $1.86 is set. It's going to be the key level. And again, I'm not going to do this with every chart, but it's all about the 4-hour charts right now across the space. We saw it in the ETFs. We're seeing it in these big board names. Plenty of room. It made enough room that Friday candle really helped the space out a lot. But look, it stopped. It got rejected here, um, right at resistance. So these levels, they start to make some sense. Pay attention. That's all I'm telling you. You don't have to be like Mr. Technical trader, blah, blah, blah. You just have to pay attention to levels. They have importance. They don't predict anything. They just tell you where maybe, you loaded the boat here. Maybe you did. Maybe you bought my shares that I sold. All right. Well, it's nothing wrong with taking a little bit of a piece off into these resistances and give yourself a chance to make it up through here, and you're going to be really happy. Um, if you do take pieces off here, you're going to be really happy you did if it breaks down here also. So, everybody has to manage their portfolios and their trading and their investing the way they want to, but this is the way I look at things. Encore Energy, they just did some sort of convertible note too, I believe. I got to go back and look. Um, Weaker, right? So this is a daily trend change to the bears with some follow through. So it's a different look. High volume deal. But again, just like everything else, it's set its daily low for now at 206. So the $2 level is kind of important. Everybody got smoked here. I was a buyer here. I'm still holding a bunch of the shares and calls that I bought down here. So I'm pretty happy with that position. I'm trying to let this financing, private placement, or convertible notes play out a little bit before I start maybe thinking about adding. But again, it's like everything else, Gap City down here, trading below the 200-day moving average, can't get above it. Get some overthrows, but it just can't get above it. So that 200-day moving average has been resistance for the name since, really, since it broke down below, which is June of 2024. You get these overshoots, but that's just what it is. And again, it's another overshoot with a head and shoulders pattern look that is confirming with a little bit of follow through, right? So uh, I could talk about the head and shoulders measurements. I'm not going to do it because it's going to be a very long video. It's already long. I'm moving on. Um, in my Discord, maybe we'll talk about head and shoulders and measurements and how to arrive at what we think might be buy targets, stuff like that. What's next? Miners only, miners only. Next gen, next gen, even looks better than Encore, right? So Encore could be the baby, and we know that next gen is questionable lifestyle company and all that stuff, right? Looks better. All right. This in general is holding the 200-day moving average. This is having a pretty good stance of support right here in this $6 area. 620. Same thing over here, right? These levels are coinciding. It is getting support, right? So then it says, okay, big deal. Well, it's great as long as that support holds. But now we know that it's a pretty big level, and now we know if it breaks down that we could see more, especially if there starts to become follow through. But again, this Friday God candle, not really a God candle, but this Friday candle, it's starting to test these resistance areas. Now you could contend that this is a little baby head and shoulders too, and now it's testing it to the upside, right? Now, I talk about these head and shoulders in a way that, one thing you could say is that you got a bearish pattern like that, and it doesn't hold and it goes, that is super bullish. All right. So forget about what your bias is on patterning and candlestick patterns and all that stuff. You break these patterns. And by the way, a head and shoulders pattern, they have like an insane uh, number where I think like 75% of them or something like that. I forget what it is. Maybe someone will correct me, but like 75% of them usually they confirm. So if it doesn't, I mean, it's super bullish. Don't care what anybody says about the fundamentals. It's bullish. Remember, these fundamentals, you don't know what's going on. You don't know if someone's looking to buy their asset. We don't know that. The price action will start to tell you before the news comes out. I promise you that. Not always, but oftentimes it does. So we've got some key levels here. The 750 area. But right now it's all about like this 712, 715, 720. Really this left shoulder side. 725. We get through 725. I just want to see what this high is. It's 728. Yeah. So you get through 725, 728 area. We're looking at then testing up here and then maybe just moving on from there. So we'll see. Next gen looks, it looks better than Encore. I'm not going to lie about that. So you don't be hating on me, you Encore enthusiasts. Sideways action, weekly hammer, closed above last week's high. Moving averages, acting as support, bunched up. This is stuff that I really like to see. I have some longer term dated calls in next gen. I think they're $7 calls. Like I have to look at my portfolio. Um, I'm interested in maybe some physical shares for trading on this name now that I'm looking at it because I can see what's going on here. Right? I like this setup. I really like this setup. We got some sideways action, cool RSI on the weekly, on the daily, curling up, took out some highs, regained its daily moving averages, held all of its weekly moving averages, which are fairly tight, so they're not stretched out, right? You see the moving averages stretch out. They want to reconcile and use them hopefully as resistance or support. Well, it did just this, right? So this dump stretched the heck out of these moving averages. Now they've reconciled and they're bunched up again and they're acting as support. It's a great look, in my opinion. I love these moving averages, especially in the commodity space, because commodities love to trend and the moving averages can define your trend. So I'm going to be looking to take a position, a trading position, which could end up being a little bit of a core. Who knows? In next gen. Again, I have longer dated calls and some shorter dated calls. I think I have some sevens expiring in October, and I may have some eights or sevens that are into all the way into January. I have to look at my portfolio, but it's somewhere around there. That's the deal with that. UEC, it's going to be a monster. I already know, right? Different look than everything else. Why? Why is UEC so great? Everybody hates this CEO, and they don't produce anything. Blah 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 blah. Could it be as simple as the fact that it has the name Uranium Energy Company? Maybe. Could it be that it has a good option chain? Yeah. Could it be one of the larger holdings in the ETFs? It sure could. Um, Either way, weekly rising wedge, and it's getting through it. Rising wedges, notoriously bearish patterns, but we are not in a bearish market at all in anything across the entire spectrum. I'd say the only thing that's bearish is probably rate sensitive stuff. And guess what's happening with that stuff? It's getting bullish too. So, again, inflation, commodities love inflation. Inflation is being determined to stay higher. Commodities are going to like that, right? So, great look, nice breakdown, fakey breaky on there. UEC, a little hot on the RSI, but who cares, right? Because the historical RSI tells you it can go much hotter before anything. So again, that's why I don't get crazy on RSI, but I do pay attention. I know this. When it comes down into this weekly oversold, it's a buy. I see that. Daily RSI cooled. We like that, right? So the shorter terms, these little flush dumps cool things out. So the shorter term can cool off to make another leg for the longer term. It's the way I view it. Yes, the moving averages are stretching, and unlike next gen, which is really looks a lot better in moving average metrics. These things are stretched, and eventually they're going to want to reconcile. I don't know when, I don't know how. They will do it, as they always do. They get stretched, they reconcile, right? Acted as support for a while, couldn't do it, break down inside of this weekly wedge, right? Get stretched, they reconcile. Get stretched again, they reconcile. Use it as support, bang, right? Same deal. So it pays to pay attention to those moving averages. In my opinion, I would rather be looking at next gen right now than UEC. UEC is much stronger. That just means that, okay, I'm more cautious on adding new positions. I'll just hold my UEC. I'd rather make the play on next gen because eventually, when everybody keeps getting locked out of this monster rally, they're going to look for the laggards. And they're going to look for laggards that are in high positions in the ETFs. And next gen fits that bill. URG, the breakdown not so bad, held the support. I did add, and I think I added, believe it or not, I added on this green day and I got smoked, but it held support and it was all in my brain. I was like, all right, I want to hold support. So it got smoked. I don't care. I didn't do anything with it. Now I'm good. Right. So this again, these flushes have just made things better for a new leg. And what did URG do? Well, it blasted through this week daily EQ to the upside. Saw a little bit of selling into resistance, of course, but it's closed well above the CQ. So, it's bullish. It's well above all these moving averages. It's cool on the RSI. The weekly, it's set. So this 113, it's a key spot. It's a key spot. So support is really fully established here, and we are testing resistance, and that's a nice thing. If it gets through this, I had 139 in my head. So yeah, 139, 140 gets through there, then you're looking at up at like 150, 154, 145. It's going to get a little choppy up in here, right? Because look at all this, right? You have to look at these historical things back here from last year and September 2023. You have to look at that stuff because it's going to run into trouble there. And then you decide what to do. I will tell you that I will probably take a little bit off into this resistance test that was my ads because I want to be comfortable and I want to be able to buy them back into the support test. Just the way I operate. But that's URG. It's looking very decent for the moment. Right? You all know me. I'm trying not to be like Mr. Bear bias or bull bias, but you can't not say that this is not bullish. It was a monster flush, held support, almost got it all back already. So it's a good deal. Uroy, not my favorite name. A lot of people say it's a proxy for spot. Okay. Um, weekly, same deal. Like it flushed like everything else. Let me just see what the daily looks like. Yeah, it held support. It's holding support. Um, and technically, look, you have your low, your high, higher low, and higher high. So that's a daily uptrend, no follow through because then it took it out and it's turning into an EQ right now. So, and it's at top of it. It's at the top of the EQ. So support. It's pretty safe to say support is in this area at 250. Let's just say, for argument's sake, 250, and your resistance for sure is this triple top that's getting in the way of our lives right now, right? So 285. Let me just get this magnet on here. I'm going to give you precise stuff because some people will just say, oh, he's just flying by the seat of his pants. All right, so 287 and 251. That's your range right now. That's Uroy has established. And listen, there's nothing bearish about this at all. So I can't even. I want to say something bearish about Uroy because I don't like it, but I can't. There's nothing bearish about that daily chart. It's just slightly bearish, but it's not, right? So when I want to say, oh, is this bear? What is the deal with this weekly chart? Is this a bull flag? Is this a bear flag? Well, I'm just going to run my fibs. I'm going to make a simple fib on this dump, right? So now it's coming back up. It's at the 50% retracement of this move down over the past couple weeks. And now it's pressing up into the golden zone, right? So fib traders are going to expect some sort of rejection here at $3 and just hope that 250 holds. So this bear flag. It's basically been negated, right? This is a weekly bear flag right here up until this last week's candle. So if we take out that candle, I'm just going to give you the visual here, right? That's a bear flag. I know it's noisy and choppy. Let's see a lot of shit there, but that's a bear flag. That just reduced the likelihood of the bear flag confirming. So your 250 should hold in that technical sense. That's what I'm playing off of. I know if 250 breaks, 242 is going to be the next spot. And then I really start to worry. Then maybe we're just starting to have consolidation. And you look at a name like this and you go, okay, well, if that's doing it, what else is doing it? All right, so keep that in mind. The 4Us, it's a beast. It's getting the rare earths love. If you've watched any of my videos, you know I say it's all about the boxes, and it still is all about the boxes. Look how many times it has rejected over the past, let's just say from here, all right? Over the past 13 years, it's rejected, 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 rejected. The box has been holding. We're back there testing again, right? And the good thing is, again, there is like nothing up here to stop it once it gets going other than these levels, right? So there's going to be bag holders or just technical people, someone's going to be selling in the 20 range or 18 range, right? There's going to be sellers. There's going to be resistance there, whether you like it or not, right? But that is what's going on with the 4Us. What a flush. What a dump. If you followed me on Twitter, you know I bought this dump. I bought it. I posted it. I posted it when I was buying it. I said I'm buying it. I bought it. What a great decision, right? So as much as Dennison stopped me out on this, I bought the 4Us, and it was the better play. Dennison has not recovered the way that the 4Us are. The 4Us are testing its high from August 8th, right? And it's testing some 13-year resistance. It's closing way at the highs with strength. So what did the flush do? It cooled things off, and that's beautiful. It's beautiful. Why did I buy UUU? Well, it's the rare earth place. All right, so UUU is not a pure uranium play. It's got rare earths. And again, you could sit there and say anybody can say whatever they want about my hocus pocus with my weekly my moving averages. Look where the thing bounced. Look where it bounced. Right at the weekly 12 EMA, which is coinciding with the weekly. Actually, this is the daily 50-day moving average, and I talk about that a lot on the weekly chart. Uh, a lot of these uranium names will run with the weekly 12 EMA and the 50-day moving average in concert. They do it a lot. They do it a lot, right? And they'll do it on the downside too. So, and that's commodities, man. They trend. There is a distinct change in the character of this name. Look at the volume, okay? And when we zoom out, it's historical. It's historical volumes. It's a change in character for the lifetime of the stock. We have to pay attention to those things. Look at the volume. It is telling you something. All right. So, yeah, can it draw down a lot? Yeah, it sure could. But this is a distinct change. More than just the 600 retail blokes that have been following this space for the past 5, 8 years are now in here. That is not us. This is not Red Devil volume. This is not Uranium Insider followers volume. This is more than that. That's what this is. It's important to kind of note that um, as you take this uranium journey. So again, 13-year resistance. This is what it's pushing up against. It's been trying for a long time. Is this the time? We'll wait and see, right? So big boards, long video. Sorry, devil over and out.